Good morning and welcome to Thursday's Join the Dots. Well, this is being recorded on Wednesday. What a Tuesday that was. I think we can call it Super Silver Tuesday, can't we? The silver price moved up from 57 odd to 61.50 overnight. It was more like 60 when we went to 61 last evening. But here we are Wednesday morning and it's over 61.08 as I look. So, wow, what a day. And our Pan American up 12%. Fantastic. I said there's an awful lot of hidden value in Pan American because it has not reflected the corporate leverage that a miner has in terms of the price of a metal moving up is one thing, but the fact that that increases the margins massively with the miner having fixed costs is corporate leverage. And that's what I think is hiding within Pan American still, even after yesterday's 12% surge. Right, Thursday, Lynette Zhang. I've seen one or two of you mention her name. I'm not a great fan, but it doesn't matter. She talks about Japan's debt crisis and the debt market, bond markets crashing, she says. Good clickbait. But it's not clickbait really, because Ray Dalio says it, Greg Manarino says it, Jeffrey Gunlack, the bond king, says it, Eurodollar University says it. So if you want to join the dots, the bond market is in an awful mess. And Mr. Trump has one answer, doesn't he? Drop rates, which isn't the answer. It's not the answer at all, but it will come. And there's a fantastic interview of Donald Trump on Politico. I will link it because you need to read it, because it has a lot of things in it, especially about Europe. And I have a growing bank of information that says the US is going to be quite happy that the EU suffers enormously. Have a think. Anyway, there was a marvellous piece by Rick Rule, a presentation at the German Metals Conference. I will do that tomorrow fully because it needs your full attention. Okay? Let's have a look at what else we've got on Thursday. So much happened. So Lynette Zhang. Number 2 link will be a short that she has put out this morning. Okay, this is Wednesday morning. It's about the K-shaped recovery. And that's what's happening, isn't it, everywhere. The rich are getting richer, the poor are getting poorer. That's the K-shaped recovery, which isn't a recovery at all, only for the rich. Okay. What else have we got? Rick Rule on silver. Yes, we'll come across that tomorrow. David Morgan, the psychology of markets on silver. That's going to come. Banks pushing Bitcoin into a death spiral is one clickbait headline. Haven't looked at it. If you want to look it up, you can do that. Miles Harris, the new monetary order. Now, Miles is very, very good, very professional, very detailed, probably worth watching. So Miles Harris, look him up. Joe Bloggs. Now, Joe Bloggs is a very ordinary commentator. He calls himself Joe Bloggs because that is a typical British name for the most average person. And he presents things very calmly, very factually, doesn't get excited, doesn't really do clickbait. But China unravels is his piece. I've had a debate this morning with someone online, or rather through WhatsApp. And this person absolutely loves China, cannot see a fault in China. And yet I can see it completely unravelling. We know that the property market, the Japan 1980s, don't we? We know that the Chinese property market got so out of hand. We saw it with Evergrande, Country Garden, Logan, Greenland, Vanke now. They've all collapsed. They're all collapsed. Not in trouble, not losing profits. They have collapsed. They can't pay their bonds. They can't pay anything. And of course, the local government investment vehicles who have 17 trillion in debt, forget what AI says, forget what anyone says, 17 trillion in debt, well, they can't sell any land anymore, can they? Which is their only way of raising money. So throughout the 2020s and the 10 years before that, really, all the local government investment vehicles did was sell land to developers. And that was their cash flow. And then they could build bridges over gorges that collapsed. They could build trains to nowhere at 100 million miles an hour. They could do all that. But with whose money? Bondholders. But those bondholders need the the local government investment vehicles to produce cash to pay them back or even service the interest. And now they can't because they can't sell the land because there's no normal need. They've got 30 million empty units. The whole property market has collapsed. It's a complete mess. People have got debt coming out their ears because they were enticed to buy a second property, third property. That was their income for life. Nope, not worth a penny. Can't get a tenant, can't pay the mortgage. Mortgage rates, 5, 6. What do they earn in the bank now? Zero. You've got a consumption deflationary spiral in the country. So you've got 30% of their economy is probably collapsed. You've got 30% of their economy is consumption, in deflation, suffering. You've got 40% of their economy exports. Now, you saw a big figure out a few days ago on Chinese exports. Let me tell you what's coming. US, EU, Japan, India are going to all sanction or stop or tariff massively Chinese exports because they're killing their industries. It's not rocket science, it's 2 and 2. Okay, when you've got a problem in your own industry, and you can tell that from the pressure on interest rates around the world now. Interest rates to fall, interest rates to fall, interest rates to fall, no more than Donald Trump. Okay, that tells you, as Jeff from Eurodollar University keeps telling you, and you should always watch his show. You really should. Okay, you should watch his show. He's very good. He's telling you that rates falling, he calls it the Pringle thing, where you pop, and once you pop, you can't stop. Rates just keep tumbling. Okay, we all know that. That is a sign of problems, not something to be celebrated. It's a warning that you've got a problem. Flat beverage curve. Every country is going through lower employment. So do they want Chinese imports into industries that employ people? Car manufacturing, anything? No, they don't. So they're going to stop them. It's not rocket science. It's just 2 and 2. Look forwards, don't look backwards. Don't look at data. Think of what's coming. Okay, so exports are going to get slammed, and there's no more evidence of that than a piece I'll send you on link number 3, what Emmanuel Macron, the little man in France, says about Chinese exports. Because he will represent the EU. At the end of the day, France has a massively overweight representation. They're incredibly nationalistic and they're incredibly lazy. So they won't do much about it other than stop it. In other words, tariffs or whatever. They'll do it. And the EU will follow them. Because they're all in problems, aren't they? Germany, France, Holland, they've all got problems. And a lot of it is imports, cheap imports, coming in and destroying their industries. Okay? Now, this is very important because if you think about it, you have the EU, you have the US, Trump has said it, you have Japan now, almost, well, certainly in words, at war with China, and India, who will never trust China, never, ever, ever. Whatever the BRICS stands for, India will never, ever trust China. Look up the fights on the line of actual control and you'll see why. Now, those 4 countries, and I looked it up before I started this presentation, represent 38% of Chinese exports, and that was in 2023. I think it'll be more now. So their property industry, 30% has collapsed. Their consumption is in deflation, and they're just about to lose 38% or a large part of 38% of their exports. They're bankrupt. They've got 300% debt to GDP if you include the local government investment vehicle debt. They're bankrupt. Please understand that because it's so important in seeing how this world is going to evolve and how they're going to have a distraction, a massive distraction. Hence the very angry comments to Japan about Taiwan. Okay, that's coming. So we've got Miles Harris, we've got Joe Bloggs talking about China's crash, we've got the Eurodollar University talking about the shadow bank crisis, and again, it's not 1.1 trillion. It's more. It's maybe 2 to 3 trillion. It's not 1.1. Whenever you've got bad news, they will underestimate the figure. Whenever you've got good news, they will overestimate the figure. PR, narrative, boring, lies, and more CP lies, not CPI. Okay, because inflation in America is not 2 point whatever. It's more like 10% for the poor because the poor have to buy food, fuel, and housing. What are the 3 things going up most? Housing, food. Fuel is coming down, actually. Fuel is coming down a little bit. All right. Now then, UK household spending contracting at the fastest rate, says Barclays Bank. Not known for overstatements, Barclays. UK household cutting spending at the fastest rate in 5 years, and that's COVID. And then, of course, no one could spend anything, could they? Big box retailers were the only people allowed to sell anything, weren't they? All the little ones had to shut. Goodness me, that was a corporate fascist exercise in full bloom. And then we got, what else have we got? Politico, the interview with Trump. Yes, I'll link it. We've got a big piece from Van Greyet. So it's not a long piece, but it's a very good piece on the silver explosion to 3 figures. Now, you saw what happened Tuesday. You saw what we said a few weeks ago. I spent a whole week on silver last week. Do you remember? And we've now moved from 57 to 61. Could be higher. I'll just have a look at the phone. No, seriously, 61. 61.10. Okay. So this is a big piece from Van Greyet. This is link 4, I believe. I've lost count. Okay. Industry is soon going to soak up 100% of production. Well, we know that. We know that from the data centres, from the missiles, from the ammunition, from the drones, everything that needs electronics, EVs, solid-state silver batteries, everything is going to soak up in the production. So where do ETFs, where do investors, where do people get their silver? Because if industry is soaking up 100% and there's nothing left above ground now, think of the value of the silver under the ground, which is why I like the miners at this stage. I like the miners because their silver is going up in value and they haven't mined it yet. That's to come. Yeah. What else have we got? ETFs, I'm not a great fan of silver ETFs, but I've made my comments known on the site. I believe that because, as I've just explained to you, industry will soak up all the silver and will hoard it. So therefore the ETFs won't be able to get it and they'll freeze in some way. I don't know how quite that will work out, but what I do think is it's not an area I want to be invested in. And again, the gold-silver ratio, Van Greyet says down to 15. I've said that many times. Where are we now? I think we're 68 last night. This was when silver was 61.5, which it was very early on Wednesday morning in the Far East, and silver was 42.07. We were down at 68. We're heading for 30, and most of the really serious commentators, a little bit of clickbait, but they're looking at 15. It can get there. All right. Now that's a real sort of rummage through everything. I hope by now you've realised we're on the right journey. Okay, we are on a journey. Rick Rule's presentation, which I'll deliver my sort of analysis of Rick Rule's presentation. It's an hour-long presentation. I will link it. But we have to realise what's happening. Yeah, and he will take you through lots of things that you should consider when investing into the metals industry or miners or ETFs. It's a very good piece. You can look it up if you want. It's on YouTube. Just look up Rick Rule German gold exhibition. You'll get it. It's a pretty easy system. All right, but we will come back tomorrow and we'll do that in full. But please remember, we're on a journey, and in that journey you can go backwards at times. This move from 57 to 61 has been so dramatic. This is a lot, and Pan American went up 12% yesterday. There's going to be corrections. Do not assume that it goes one way forever. All right, and Rick Rule covers that tomorrow, and we'll go through that. You must take the journey if you believe in it. If you don't believe in it, you don't take it. It's as simple as that. Okay, thank you very much, and we'll come back tomorrow with Rick Rule. It's an incredible interview and something for all of you to really take very seriously. Thank you very much.